Hey everybody, good morning. Welcome to our Marketplace Finance LinkedIn Live event, where we're going to be sharing some wonderful suggestions and recommendations on how Marketplace Finance can help grow and expand your business, particularly through the current environment and way beyond 2021 as well. But to help me do that, I'm joined by some Marketplace Finance experts and wonderful colleagues of mine. So let's not waste any time and get them straight on. So first of all, let me introduce our co-director of Marketplace Finance, Matthew Johnson. Matty, good morning.
Morning, Dino. Great to be here.
Thanks, mate. Thank you for joining us. Our second Marketplace guest, or colleague, I should say, is my National Manager of Partner Relations and my partner in crime, Zoran Petkovski. Zoran, good morning.
Morning, mate. Morning, everyone. Hope everyone's well.
Yep. Thanks, buddy. Thank you for joining. And last off, we have our Associate Sales Director at Marketplace Finance, Isabella Constantinou. And Isabella, hopefully I pronounced the surname correctly because I forgot to ask before we went.
Don't worry, it's a tricky one. Hey guys, how are you?
Oh, good. Maddie, we're going to get right into it. And listen, if anybody has any questions who are watching, feel free to drop them as a comment, and the guys are more than happy to tackle them live. So we are straight off live off the LinkedIn page, and we are actually streaming off YouTube as well, for in case there's any brokers that are across the YouTube and not on LinkedIn that wanted to tune in and watch and get some tips and hints about what we're doing in the commercial space. But Maddie, let me start with you. So this year, mate, we probably don't need to talk about the current environment that we've seen throughout 2020. Your take on the current state of the commercial lending market, what do you see happening in 2020 and what has happened?
Yeah, it's certainly been a turbulent year, Dino, and I don't need to tell anyone on this call about that. I think what we saw with commercial lending markets, if we go back to March when COVID really escalated, we certainly saw what looked and felt like a credit crunch. It wasn't. There was plenty of money around to be lent. It just was that lenders were holding the money back. And so what we saw there was turnaround times blow out, pricing increase. And we saw terms get more difficult to be able to achieve, I think, and hurdles increase. So now that's continued throughout 2020 to varying degrees, and depending on whether you're talking major banks or non-banks, it's changed a little bit. So I think if we talk major banks, what we're seeing at the moment is still that sort of heightened risk awareness around everything COVID. Now that might manifest itself through an increased interest cover ratio hurdle that they may set. So, for example, I know a major bank at the moment that historically would have been happy with an ICR ratio of, say, 1.75 to 2 times on a commercial deal, whereas now they're sticking 3 times interest cover. So they're just increasing the hurdles, making it a little bit harder for people to borrow the money. And they're really trying to make sure that when they lend the money out, they're lending it to really strong clients that can withstand, a shock to the system. Now, in the non-bank space, again, if we go back to March, we saw that similar type of tightening. And again, the cost of the money went up, and the terms that the money was lent out on were harder to achieve and more stringent. What we're seeing now is that's very much normalized, I feel now. So pre-COVID, the commercial space was very much freeing up. There was a lot of new money coming into the market, and there was a lot of competition. So pricing was reducing. It was a good place to be. It was a good result for clients. What we've seen is that type of environment's definitely returning. So it looks and feels to me a lot more, normal. I think, if you take Victoria out of it, I feel like the country is learning to deal with the situation with COVID to a large degree. We spend a lot of time, obviously, in Sydney, and whilst we haven't been able to knock COVID on the head, I think businesses have continued to find a way to operate and trade. And that sentiment, that positive sentiment, then creeps into everyone's sort of mindset. And, I think we've all at different times had a little bit of negativity creep into our minds. It'd be hard not to at different stages throughout the year. But I think at the moment, there's very much a positive mindset that's permeating through the economy, which is fantastic. And I think that'll continue with Victoria starting to reopen. I think that's only going to help push that along. It's obviously a big economy down there, and Melbourne's an important city. So it'll be great to see that start to open up. So I think to summarize it there, it's probably, it feels like it's normalizing, but I don't think the major banks are going to be anytime soon. I don't think they're going to be pushing forward aggressively. I think they're going to be cautious for the next period of time. That might be the next maybe 12 months, certainly. The non-banks, though, I think are aggressively trying to get some market share. So the commercial space is an interesting place to be at the moment. I think if you do have a client that's got strong cash flows and good experience, you can definitely get some really, really good terms out there. And the major banks are keen for that business. The challenge is there's probably less clients that are in that boat now than what there were probably 12 months ago.
Yeah, great. And that's a really good insight into what we have seen in 2020 and where hopefully we start heading in 2021. And definitely agree with the Victorian market opening up and sort of, I suppose, throwing an extra spark throughout the Australian economy. So we're looking forward to seeing that hopefully sooner rather than later. But before I throw Zoran a question, I did want to give people an insight into what Marketplace is. So if you haven't had the opportunity to look up Marketplace or haven't spoken to myself, Zoran or Matt previously. So my take on Marketplace, and this is the way I like to explain it to my partners, is we're basically a third-party introducer portal where we assist our partners with commercial transactions in a way where they want to do business with us and in a way where we can fulfill their needs and their client needs as well. And that service proposition and that offering is extremely important, not only to myself, but everybody throughout the Marketplace family. So guys, I have put on the marketplace.finance at the bottom of the screen. More than welcome to go through and get some further information on exactly how we operate. But Zoran's actually going to share some real key insights on how partners can expand their businesses through finding different opportunities in the commercial sector, whether it's going through your own book or going out into the market. So Zoran, on that note, different tips where people can actually take away today physically implement into their business from day one. What can they do?
Yeah, so a lot of our referral partners are your traditional residential mortgage brokers who may not necessarily play in that commercial space. They've never had the exposure or the knowledge to go out there and actually go and chase some commercial leads. So there's your traditional ways of advertising, marketing your business, letting everyone know that you now offer commercial finance, but that takes time and that also can be expensive. There's a couple of points that I would sort of refer to in sort of mortgage brokers in introducing commercial to their existing client base. So I think that's the quickest and the most effective way is to look at who your existing client base, and I'd start with the self-employed. If a customer is self-employed, this can be the first indication that there's more likely a need for commercial debt. You probably have a very strong and thorough understanding of the customer's operations, their strategies, and their goals and what they're looking at achieving when you've done their home loans, for example. You've had to look through their A&L. You've had to look at what type of exposures and what sort of debt they've got or facilities that they have in place. So this is the first step that I would start with personally, and this is what I recommend to all my residential mortgage brokers. Look at who your existing contacts are. Look for commercial debts on the A&Ls and balance sheets. If your client has existing commercial debt facilities in place, offering a no obligation review of this debt is one way of starting up the conversation with the client. The client may not necessarily have known or understood that this is part of your offering to them. So it's one way that you can show that you are looking at their position holistically as well. So if you're also doing their residential home loan, as well as their commercial facilities and potentially asset finance or equipment finance, your retention of that client significantly increases as you move forward. So if you have an external broker who potentially offers a commercial facility to that client, that broker may then instigate a conversation around their personal or residential facilities. So you may lose that client by not offering the commercial facilities to them. Another way of doing increasing your commercial offering is building relationships with external consultants. So everyone is potential customer. The more your customer base grows, the higher opportunities are available to you in order to grow your business and be able to offer those commercial facilities. So if you're dealing with an existing customer, and you're talking to their client or to their accountant, or speaking to their accountant, requesting financial information or financial data, this is another way of opening up the conversation to the accountant as a potential referrer as well. And that also applies to the solicitors, builders, or any other stakeholders that the current deal can often lead to new referral sources. So these new conversations that you're having are building relationships and potentially providing you with additional customers from the existing referral relationship that you may have with that particular client. Is that, without rambling on too much, Dino, is that okay? Or?
No, mate, that's spot on. I think there's some really beneficial tips for people, and I think all in that I picked that out of that, Zoran, is about identifying those opportunities, what they look like, where to look for them, and then actually being confident enough to ask for them. So whether that's upskilling in your knowledge base or having a trusted partner like Marketplace Finance to actually assist you on that journey to fulfilling that need for that client.
And that's where the marketplace offering sort of fits in quite well. If you haven't had that exposure in that commercial space and are not confident in having the conversation around specific facilities, we're more than happy to help you partner with us on that particular transaction or a number of different transactions, so that you can learn along the way and have an understanding of the type of questions that we will ask in the commercial space to try and identify the needs of the customer and their business and what they're looking at doing overall. So if someone does have a deal that comes across their desk that they're unsure of and they haven't seen in the past or haven't facilitated any of those type of facilities in the past, we are more than happy to assist with those type of conversations.
Yeah, absolutely, Zoran. And I always tell my partners, like, we need to bring diversification to life. Like, there's a lot of, particularly in the broker channel, there's been a lot of seminars run and events run over the last probably more 5 or 6 years than previously. But there's these seminars that people go to, they get all this knowledge, they jot notes down, and they go back to their office and they're trying to tackle 50 other things that week, and they forget about what they've learned and how to put it into practice and who to go and find source information from. So I think the Marketplace Finance offering is strong in the sense that we can mold our offering to that type of partner on how they actually want to deal with that particular transaction, in a sense where they can upskill their own knowledge in the commercial sector, particularly if they're handpicking certain transactions, and they can earn revenue along the way as well. So that's a power of, I think, what Marketplace does and how we actually offer that service throughout the clients.
That does go back to my earlier point of client retention, so that if you can offer not only residential broking services, but also equipment finance, asset finance, and commercial, the chances of that customer staying with you on the longer term significantly increases.
And I think it's important as well for everyone, and this is not just Marketplace, this is just generally, I think we're all specialists at certain things, and whether we like it or not, there's certain things in life that we're better at than others. And for someone that might be writing a home loan, for someone else that might be hitting a golf ball, it doesn't matter what it is. But I think we're all kidding ourselves if we think we can do everything really, 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 really well. It's just so difficult. And I think about home loans. I started at National Australia Bank in the early 2000s writing home loans. Now that area has moved so much around the legislation and the obligations that are on brokers to be able to be compliant, let alone just do a good job for your client. If I try to do that now, I just struggle because I'm not doing it all day, every day. And so when you're trying to pick something up and you're trying to do something that you're not doing all the time, it's difficult. It's hard to become an expert at something without doing it all day, every day. And it's the same in everything. For us, that's what we do. We do commercial lending. So we know the nuances and who's doing what at any given time. If you try to throw me a home loan and say, where's the best rate for this particular client, I'd have absolutely no idea where to start. And it's the same thing in reverse for commercial.
Yeah, great point, Matty. Great point. Isabella, off to you. I wanted to pick your brain because you've got a wonderful knowledge and mindset around the development sector when it comes to what we do, but particularly in that construction space. How have you found the differences pre-COVID, or 6 months ago. Let's put it in those terms. What have you seen?
Thanks, Dino. I think just generally everyone will agree that things were easier pre-COVID. I mean, particularly I moved into this sales role in March or April at the start of the year, just before sort of things got bad with COVID. And I think I've seen firsthand the differences between the pre-COVID construction lending space and the new world that we now live in. So I think generally there was just a lot more choice and flexibility in the market. Things like no pre-sale lending, higher LVRs, they were definitely becoming more prominent among the non-banks. And even some of the majors were, you know, starting to relax or loosen their policies for really strong projects or really more experienced clients. I think there were maybe also more ways for like us as brokers to maybe mitigate weaker points in a transaction. So like from my perspective, if I had a client come in that had a project in, say, a suboptimal location, or the developer had a bit less experience, or the builder just wasn't maybe a major bank builder, historically there were much simpler ways to be able to mitigate these risks in the eyes of the lenders. Like you could get an external PM in, or you get a couple of sales away if it's in a really obscure location. And it was generally just a lot easier to evaluate a deal initially and have more confidence in, I don't know, 3 to 5 lenders being able to write a deal. And I think it's important for our marketplace transactions that come through the door. Obviously, when we get the deals through from a referrer, I think pre-COVID, there wasn't as much information required up front to be able to evaluate a transaction. Whereas now we're being a little bit more stringent on the information we need up front to be able to have a good idea of where we could place the transaction. Because now, whilst there's less choice in the market, although in saying that there are lenders who are already partly back, there's just more due diligence required from our end up front to work out who will do the deal. And I think one of the great things that has come out of COVID is that we now have access to such a larger matrix of lenders, and a lot of them are starting to even look at no pre-sale construction again in that sort of non-bank private space. And there's just a lot of competitive tension from the non-bank market now. And I think COVID's been a massive opportunity for these lenders to capitalize on some really great projects and maybe get a look in at some bank quality clients that now are finding it difficult to secure their funding. So yeah, I think in saying that, they're like, a lot of our clients who have historically been like lowly geared bank clients are also seeing the benefits of taking up alternative funding options. Like they might see the benefits of flexibility in their terms or timing to settlement, not having to get as many pre-sales. And it's just about knowing where to go. So like Maddie said, like this is what we do day in and day out. So if you're not actively working in the industry, it's difficult to have relationships with these niche players. And I think it's really important in the current market when the choice isn't as broad as it once was.
Yeah, great is. And I want to come back to you and tackle, you mentioned around getting your head around and understanding like the non-bank and the private segment and where we're, and that less competitive market, and I suppose they're opening up those doors and where we're sitting. But I want to come back to you and tackle you a little bit more on that one. But Matt, if I can come back to you at the moment, particular segments around growth over the last during 2020 and particularly going into 2021. I'll throw that question to you, but I'm open to hearing Zoran and Isabella's views on it as well, on where you think particular segments are going to continue that growth area, particularly going into next year. What's your thoughts on that?
Yeah, the crystal ball question.
You have it on the desk.
Yeah, absolutely. Yeah. It's going to be really interesting, Dino. And I think we've all probably had an expectation going back earlier in the year that once some of the government support started to drop away, so your job keeper being the prime example, and obviously the bank repayment holidays, I think we all expected probably a fall and a pullback, particularly in residential property, but also in office space. And I think we've all probably been surprised, not surprised, maybe pleasantly surprised is the right way to put it, that residential property has held up really well. And we've had some pullback. If I think in the commercial space where the opportunities I see coming up, I think and I'm already seeing this now, but I think it will continue into next year. I think commercial property in regional areas and say suburban areas out of CBDs, I think will be a growth area. We're seeing warehouses, distribution center type commercial properties having quite high demand, particularly if you can get a good counterparty as a tenant, whether that's a government body or say a large corporate. There's plenty of businesses that are still doing really well out there, and they need space, and particularly with online shopping and that type of thing continuing to grow, and it's only going to go further now that people have probably tried it for the first time. There'll be some people that would have tried it for the first time during COVID. They're only going to continue with that. So I think anything in that sort of space outside of CBD centres is going to have a good growth profile on it. If you look at some of the forecasting coming out of the government, we're talking about a rebound in GDP next year of somewhere around 4 to 4.5% is what's forecast. So there's going to be some significant growth happening, and it's just trying to tap into where those sectors are, which, as I said, I think logistics makes sense that should have a good growth profile, given there's got to be trucks and people delivering goods and services around the country. So your equipment finance then is going to come into play there from a lending perspective. Those guys need trucks and they need equipment, and warehouses need to be fitted out and spec'd out, and there'll be equipment that goes in there. So I think that's going to be a growth area. And I think commercial investment will probably have a little bit of a renaissance, particularly given you get a higher yield traditionally on commercial property than what you get on residential and other asset classes. And with interest rates being so low, I think people are going to be looking for returns. And I think if you can get a 8% return, which you can on in commercial assets at the moment in the right locations, I think people are going to find that attractive. So looking forward, that's where I'm thinking there'll be growth. I think there's going to be a jump in unemployment. It's going to happen as the government supports come off. So your residential markets are probably going to have a little bit of pressure on them, I suspect. But with interest rates so low, I don't see there being any massive crashes. So, I like those commercial, pretty generic. I think commercial office space in suburban areas, I think we'll have some upside as people continue to have an element of working from home. I think more people will come back to the offices. I don't think offices are dead by any stretch of the imagination, but I think flexibility, and we've certainly seen that with our business, and the guys on the call have experienced that. There's a way of balancing out now, rather than being 5 days in an office, that you can be 5 days maybe in potentially various offices, or maybe it's a home office for one day or whatever. But I think having a location outside of a CBD is going to be attractive to people to be able to not have to travel as far to get to an office or have an office presence. I think that'll have some legs in it looking forward in 2021. So I'm not sure if that's totally answered your question, Dino, but I think that's what I'm expecting looking forward into next year.
Yeah, I think you've gone as well into the crystal ball as anybody could have, Matt. So thanks. But in case Zoran or Isabella has part of your crystal ball on their desk, I'm happy to hear their thoughts on that as well. Otherwise, I'm more than happy to continue on with questions, guys.
I actually heard something interesting on one of the other webinars that the guys did for the MFAA the other day. One of the bankers made a good point about the shift in maybe the style of residential developments going forward, having more of a focus around having home office facilities available. And I think that's quite interesting, because historically we probably didn't really think about it. Like, yeah, it's okay to have a study in your house that you can work out of, but having all of the facilities like a standing desk or multiple screens, like in the soundproofing rooms and whatnot, I think we'll probably see a trend towards that going forward, because the whole thing with COVID has made it so much more flexible in terms of working from home and not having to necessarily be in the office all the time.
Being able to shut the door on your kids, it's important.
I think that's a big part of particularly an investment strategy portfolio, where you normally tick the boxes around CBD area, public transport, schools, hospitals. I think office space in a home is going to become part of that list with people moving forward. So I think you're spot on. It was a good webinar from the MFAA that Matt wonderfully moderated, that we all caught a couple of days ago. So that was great. Got a good point. Zoran, did you have any other thoughts on that one? Otherwise, I do have a question for you.
I just think that The appetites, we've just got to be wary of the appetites of the major banks and the non-banks. I think in just adding to what Maddie was saying, just understanding what you're offering from these non-banks and the private lenders, and how it changes over time and how it will change even more, and then the distinctions will be probably more skewed or unrecognizable, so to speak. It may overlap. So that's the only thing as brokers or resi brokers or commercial brokers, we just have to have a better understanding of what the offerings are out there, depending on the climate, because of COVID and because of the changes that are happening around. So yeah, it's just going to be an interesting 6 to 12 months. Definitely interesting.
Yeah, it definitely will be. And Zoran, whilst I've got you, I want to stay with you. And for partners who are watching or potential partners who are thinking they maybe want to come on board with us and use our services at Marketplace, you've touched on around tips on how people can identify opportunities. So let's take it one step further. So after a partner has identified an opportunity, what do they do? I know we're not sharing any screens, so we're not going to put up a PowerPoint or anything. In your words, what do they do? How do they get into Marketplace Finance to have a look?
Absolutely. So I think you mentioned that you've got the marketplace.finance website there. So the first option would be to go on the website. Well, there you go. It's flicking across now. We do have a lodgement portal there. So we've tried to make it as user-friendly as possible. So essentially what the lodgement portal allows any referral partners or anyone out there actually to do is to submit a new scenario. All we ask of you is to submit a very high-level sort of scenario of what the transaction entails. As much as information as you have, and we do understand that it is commercial, and you may not know what questions you should be asking or what information that we might be asking for. So we've got a step-by-step process in that lodgement portal where if you can answer those questions, and I'm talking, it might take you 2 to 3 minutes to answer the majority of those questions. It'll give us an opportunity to have an understanding of what the transaction entails. And then we can engage an additional conversation with yourself or directly with the client to get the more precise answers that we may need in order to let you know that, yes, the scenario is a valid scenario and we're more than happy to assist you on that particular transaction. Or, look, it's probably not something that, it does have any legs, or, again, we'll probably might ask for some additional information from you or from the client themselves. And again, that process is a step-by-step process and would only take you 2 to 3 minutes via the lodgement portal on the marketplace.finance website.
Awesome. Thanks.
And yeah, so in saying that, so beyond that, at Marketplace Finance, either myself or Maddie or a couple of the other sales managers, we would receive that email. So we'll get back to you in probably 2 to 3 hours of receiving that particular scenario. And again, we can engage in a conversation to get a better understanding of what that particular transaction may be.
Wonderful. Yeah, it is that simple for people watching, and I know people are watching even though we're on a background on a streaming. I do have my phone with us on live, and the live numbers seem to be flicking between that 18 to 25 mark, so it's going up and down. But there is that simple. But Zoran, just staying on that point, when partners have lodged a scenario and there's an opportunity that we're assisting with them, how can they get an overview of where that sits with us? Do they have access to something?
Yeah, no, so good question, Dino. So we do have a dashboard, similarly to what a broker may already be used to in working with a lender or a bank, where they can log into that particular lender's dashboard or portfolio. You'll be able to see the progress of that transaction that you've submitted through to us. So from the gathering information stage to potentially settlement stage, there's about 5 or 6 different stages, various stages that we will push that transaction through as that transaction progresses through to docs received or settlement stage. So you have your own login and password, go through the marketplace.finance website on the dashboard, and again, you can check the progress of that particular transaction at any time from your laptop. You don't have to call us. More than happy to take a call from anybody. However, for your convenience, logging into the dashboard is probably the easiest way of doing it.
Yeah, and everything's on the one side on that marketplace.finance that's running below the screen. So it is nice and easy. You don't need multiple passwords or going into different systems. But our commercial associates are more than happy to work with people and have those chats, as you mentioned, Zoran. But going through to a sales associate, Isabel, I want to come back to you and touch on that point that you discussed around why is it important to be across non-banks and the privates at the moment? Can you give us your insight into why that is and what you've been seeing?
I think the non-bank lending space is just a hugely competitive part of property lending, and it was definitely happening pre-COVID, but the last, say, 6 to 9 months has probably brought to light a lot of good things about the non-bank space, because I think it was an opportunity for these lenders to really get their processes and their products right, because there was an opportunity for them to dominate the market when the banks pulled back. I think traditionally there's probably been a bit of a misconception around the non-bank lending space, that it only really applies to like complex or risky projects or those that needed mezz funding or bad credit clients or whatnot. And I think a lot of these have been somewhat debunked, especially in a world like today where, you know, your more vanilla projects are probably considered risky in the eyes of some of the banks. So I think like it's just really important for like our referrers and our clients to be across the offerings that are available, that your majors aren't your only path, particularly like in the construction lending space. I think when Maddie was talking about, you know, the crystal ball into the future, particularly with the majors, him and I were discussing earlier this morning that we don't, like a lot of the projects that were maybe historically started 12 or 18 months ago will be coming to completion now, and a lot of that will be being paid out. And whether or not the majors want to like reignite their construction book or not will depend on their appetite and whether they want to take on more construction projects. So it's important for like everyone to just be across that there are other options out there. In saying that, you need to know where to go, because on the other side of the coin, probably the whole COVID situation has also meant that anyone with a bit of money has probably seen an opportunity to be able to lend. And there are also probably some lenders out there that you should steer clear of. And I think it's just important to be guided on where to go. And like we do this every day, so we know the lenders to steer clear of, the ones we use for different styles of transactions. And I think that's just the most important part of the non-bank private lending space, is just making sure that you're informed about where you're going. So yeah, I think like it's definitely a very good option out there for a lot of clients, and I think that's being more widely adopted and accepted in the market.
I think that's a really important point, is that you know, at Marketplace, we encourage people to specialize in what they're good at. But whether you use Marketplace or not, I think that's really good advice when you're getting into, if you haven't had a lot of experience in that non-bank private lending space, is you've got to be really careful. There's some horror stories out there around lenders and some of the fees that get charged and the way that they go about business. It's not like it works in the bank. And it does take a little bit of experience knowing who's who and who to deal with and who are the best players to deal with for your clients. Because when we put a client somewhere, where that's us recommending it, or it's you recommending it as the advisor. So again, whether that's through Marketplace or not, there's no better advice, I think, for anyone who hasn't had a lot of experience in that space to really do the due diligence on who the lender is. Are they a lender, or are they just a broker dressed up as a lender, which we do see plenty of? So there are quite a few traps that you can fall into that ultimately will negatively impact on your client experience and your brand personally. So it's really important. And that might just be a phone call to a few people in the industry to find out, you know, do they know about X, Y, and Z? Have they heard of Joe Blogs before? And, you know, I'm seeing these great terms and just what that experience has been, because it can really negatively impact on your business as a broker if you have one of these horror stories play out for a client of yours.
And your client's experience in the non-bank and private lending space is going, like for us, it's completely dictated by our guidance, because particularly like I've had a number of clients over the last 6 to 9 months that historically have probably stuck to the majors, and initially they might have been a little bit hesitant to consider terms from, you know, your larger non-banks like your La Trobes or RF and Qualitas, whatnot. But it's all about being transparent and making them feel comfortable with the option and why it's right for them. Because there are a lot of good things, like I mentioned earlier, like the flexibility, timing to settlement. There's a lot of positives with being able to use an alternative funder, but it's just knowing where to go.
Yeah, great points from both of you on there, and I couldn't agree more on those segments. But for everybody that is watching, feel free, if you have any comments. I know it's scary to put it in a public forum, particularly when the audience is only on our actual event. So there are probably majority of brokers. I noticed there was some real estate agents and accountants that had joined the event on LinkedIn. So I know it's scary throwing a question on there. I have actually seen a couple come through my email. Give my emails on my LinkedIn profile. So I'm more than happy to take those personally, and if I can't answer them, I'll definitely forward it on to these experts that you're seeing on the screen. But feel free to share them. It's a pretty trusty environment. It's a rectangle of trust, but either way, so just so we're on the home stretch, Matt, this is probably the last question that I wanted to tackle. And again, I'm more than happy to hear Zoran and Isabella's views on it. We saw government announcements come through the budget recently. We've seen a huge avenue in regards to changes from the personal standpoint, where people are going to get more dollars in their pockets when it comes to less tax that they're paying. But from a commercial standpoint and a business standpoint, Matt, where do you think those government changes are going to be affecting our industry over the next period?
I think it's going to have a huge impact. The recent budget we saw, I mean, people older than me have said it's the most stimulatory budget since World War II or since the Depression. So it's definitely going to have an impact, and I think in a positive way. And I think one thing that we've seen this year across all levels of government, well, maybe not all levels of government, but I think in 90% of cases, the governments have reacted really, really well, really positively and really quickly, which is not necessarily something you'd associate with Australian politics, maybe going back over the last decade. But I think if you look at things like the instant asset write-down will be, that's going to encourage businesses to go out there and invest. So I think that's definitely going to have a stimulatory effect and encourage people to be going out there and taking on vehicles or taking on plant and equipment that they might have been umming and ahhing about it. There will be other, obviously, tax incentives built into the system where you can, tap into losses historically and all sorts of things there, which again is going to help put cash in the pockets of business. And what obviously the government's trying to do there is not make business people, richer, is they want them to encourage they want businesses to go out there and employ people and make sure people have got jobs so that they can keep spending money and keeping the economy ticking over. And so I think that will have, equipment finance, I think, is going to be definitely encouraged. And I think having a capability in the equipment finance space will be important for brokers going forward to be able to cash in on that. And then I think, again, if businesses have got money, they're going to look to hopefully invest and look to create value for themselves. So I think they're going out and buying premises where they may be renting historically. I think they're going to be looking to do that. They're going to be an ability to take advantage of low interest rates and more cash in their pockets. So again, that ability to be able to help a client who may be renting their premises where they're based out of for their business to be able to go and buy that. As a broker, I think that's going to be an important thing for us to be able to take advantage of in the next, certainly 2021. But let's be honest, this is going to be rolling through for a couple of years yet. So I think over the next couple of years, those types of government steps, and obviously responsible lending changes that have been proposed now by the government, I think, again, that's going to be a positive, obviously, for a lot of the home loan brokers out there. That's going to help them in the home loan space. But definitely for small business, brokers who are small business clients, that's going to be a massive positive because, business owners trying to borrow money the last few years has been very, very, very difficult, the steps you've had to go to. So, again, I think that's going to encourage small business to be out there and doing things. And if small business is doing things, it's going to create jobs and that's going to keep the economy in that recovery mode and help underpin the recovery, I think.
Yeah, I couldn't agree more. I think there's going to be some big changes and some real benefits to the SME market, let alone the consumer market, when it comes to residential lending as well. Zoran, did you have any final thoughts on that one?
Yeah, look, I just think that as a broker, you are that trusted advisor or the trusted partner for your SME clients. If you haven't already done so, pick up the phone and ask how they've been going over the last 6-7 months. How has business been performing? In some instances, a lot of businesses become busier, as Maddie alluded to, with some industries earlier. We've had a couple of clients come to us who are in the logistics or transport industry, upgrading their fleet of trucks. One of our clients is expanding and buying another 5 or 6 additional trucks to cater for some of the contracts that he's won with some of the larger retail outlets. We've had a couple of customers or clients who have upgraded their warehouses because they're seeing an increase in the amount of work that they're receiving, so they need larger premises. So there's an opportunity there. So reaching out to your existing SMEs, as I mentioned earlier, is probably your best opportunity to try and secure additional transactions or just to help out your SME clients in the current environment. So I think that's probably your best bet.
Yeah. And Isabella, over to you for final comments and thoughts.
Yeah, I think the boys hit the nail on the head there. I think just staying in contact with your clients and checking in. There's going to be lots of changes happening with all of our small business clients. Week in, week out, things are going to be different, and we just want to make sure that we're on the front foot of being there to support them. So I think Maddie and Zoran covered that really well.
Yeah, I couldn't agree more. And before we close off, for everybody that has watched or will watch a replay of this, we will be coming to probably every 2 to 3 months at this stage. So maybe once every quarter, we'll be coming through with a different segment and a different highlight, particularly what's happening in the commercial segment at that time and what's important to partners and to our industry and how we can really add some value and continue bringing that diversification piece to life. Because it's great that we talk about it, but unless we put action into play, we're not going to learn anything and not going to grow from it. So on that note, Matt, Zoran, Isabella, thank you so much for joining me this morning. Really appreciate your time for everybody.
Thanks, Dino.
Thanks, guys. And everyone watching, stay strong as always. Thanks, guys.